Good evening, peoples. It is Bruce with Targeted Wealth Creation. All right, so let's get into the Roundhill declarations again. You have to buy on Friday, 10/31, Halloween. So they pay on Tuesday. Ex-dividend is Monday, so they pay on 11/4. All right. So NVDW, the underlying NVIDIA, how did it do? Well, it paid 48 cents versus 47 last week. So the price went up $6, almost $6, right? $5 and $5.50, which is excellent. So over the last 6 weeks, remember I keep track of this, $3.72. So if you go add these six columns on the weekly, don't ask me why it's just a place that I picked. If anybody has a different thought, I thought about maybe showing the previous 6 weeks over here. It's a lot of data, but it's useful data. Remember, guys, that these funds, they're income funds, but don't be afraid to trade them. Now, yeah, I know it's tax implications, but excluding the tax implications, nothing goes straight up. Over on my Patreon, I've got everybody in metals and miners for the most part over there. We're doing great, but there are pullbacks. But I always say this is a 4 to 5 year bull run. I can no longer say that about a lot of the tech stocks. I think they'll be flat to slightly up over the next 4 to 5 years, but I don't see the Nasdaq or the S&P 500 performing the same way it has. Gold has outperformed the S&P now for 25 years, or in 25 years it has a higher annualized performance. So that gold and silver prices will translate into earnings in the gold and silver producers and then re-rate and drag up those that have ounces in the ground discovered. Some of those companies will get bought out, some will grow to be producers and go up 5, 10, 15, 20, 30, 50 times in some cases. A lot of money to be made on that front. Reminds me of the 90s run when I worked in high tech, and toward the latter part you had the dot-com boom, but your Cisco's and your EMC's and your Microsoft, they were acquiring a lot of small tech companies. So that's what will happen in the mining. And so we're killing it over there. If anybody wants to know, I always put this out here. Come over and take a look at us at www.patreon.com/TWC for my 100. So that is where we live, peoples. Um, just a little plug, but honestly, it's great value. If you think not, go out, join as a free member, and see what people are saying over there. Okay. So obviously, these were caps were on. So www.patreon.com/TWC100 for my targeted wealth creation. All right, guys, enough on that plug. Let's get in and finish this. So exciting at the very end, a couple of new launches, right? It's showing you that Roundhill is aware of this commodity super cycle. They launched a competitor to GDXY in its GDXW, right? Everything ends in a W in the Roundhill funds. A weekly pair, GDXY, has changed like all of the single stock funds with single stock underlying index or fund, then they're all now weekly. So we can directly compare them even easier, even though I've been doing it in here. And I'll continue to do that when I get over here to the Roundhill versus Yield Max fund for fun. Okay. So it continuing. So my whole point here is back to that, just a little information beyond just the raw data. some of you guys know, some of you high yield guys are very good at trading in and out of these, buying them, picking tops and bottoms, although you're never going to pick the perfect piece there. Um, but you want to be aware of that, right? Where is it? So you load up, sell. You may have, say, hey, I love NVIDIA. I love NVIDIA, I love NVDW, whatever your choice is. I'm not here to persuade you, but I am here to tell you the facts. And 14 out of the 15 funds, Roundhill wins. Why do they win? Because they capture more on the upside. Yes, they can potentially lose more on the downside, but are you buying something that's bullish or buying something that's bearish? Why would you go into an income fund for something that you're bearish on? You're going to lose 90 to 95% of the stock value the same way if you bought a stock that you were negative on, right? So it doesn't make any sense. Now I realize all stocks, even in a bull cycle, have bearish, retraces, but they're typically shorter periods of time. The old saying is higher highs and higher lows, right? So you keep on moving up, but yeah, you retrace 10, 15, 20% sometimes, 3, 4, 5, 6 weeks, right? It doesn't mean you get out of your income fund, but you become aware of it. And when you see that, you maybe want to trade. Maybe you do 50-50. Here's my core position, and here's 50% of my tradable position because I realize some of you need income, right? Otherwise, if you don't have to have that income, almost always by the underlying that you're bullish on, it's no different over in my metals and miners. All right. So continuing now, 487, 50% yield, up $5 on the week. But this kind of says to me we may be getting toppy here. All right. So how does NVIDIA look? It looks great ever since 228. So we're now 8 months in, right? 1028, 228, 8 months and 3 days. It has paid out $17.48. What about NAV erosion? Didn't have any NAV erosion for this period of time. $1.12 gain. Okay. And a lot of that, if you look at NVIDIA, that's not true. And I'll show you when I do the comparison. It erodes. Why? Because on the upside, NVIDIA cannot capture anywhere near what NVDW captures. It's plain and simple, guys. Until Jay gets his head out of his ass and figures out they got a losing deal over there, they'll make a change. They did make the weekly change, right? But right now he's getting beat at his own game. He can write all the books he wants on options, but he's not getting it done. And the fanboys can continue, waving the fans. But it isn't going to change what's happening, guys. And they can hire all the spokespeople to go on CNBC. They had a first mover advantage. Guys, they're getting beat at their own game. They're out optioned, okay, on the option strategy. Plain and simple. Neos is doing very well as well. They're just not as big. They don't have as many offerings. All right, guys, enough of my rant. Those are sincere, trying to help you. Okay. So TSLW, underlying Tesla, had a bad week if you look at it, down 173 from 38.59 to 30. Remember, the numbers don't mean, this doesn't mean as much sometimes unless you see it in percentage. But over here, I show you what's it trending for 6 weeks. Well, this one's trending up and this one's trending down, okay, on Tesla. But Tesla has come a long ways to getting better. And remember, when I say Tesla, I mean Roundhill Tesla, TSLW. All right. So it paid a 61. Tesla W has no problem, nor does Tesla, in paying a high yield. It's volatile, guys. Look at these 199, 115, 119.90. But that's not the game. Are you up or are you down? Well, you are up if you bought Roundhill, right? If you bought NVIDIA, you're up $18.50, a little more, 10 cents more, but call it $18.50. If you bought Tesla at the same time, these first five stocks all launched at 228, then you are only up $4, right? 1847 minus 1449, around 398 to $4. All right, guys. So you're still up. You're up because you're paying an excellent amount of money and you have leverage when it goes up. I'm pretty comfortable that ultimately Tesla will do very well. All right, Apple, nice trend, 426. Okay, 32%. This isn't a big payer. It's had a 64, but and a 40, 340s, but everything's in the 20. Look at this. Paid a hell of a one back at 105. But bottom line, it's okay. It's Apple. It's a big giant Mag 7, company that's not going to double and triple over the next 4 or 5 years. If you want that stuff, get out in my Patreon, guys. I show income funds as well. There's just fewer of them, but there's a hell of a lot of stocks to make you a lot of money. Game changing, generational wealth money. Okay, guys. Now, I'm going to plug it every time I get a chance because we're winning over there, guys. If you're not winning here, and I have a lot of people that learned about me on Patreon from these high yield funds, but not everybody's successful at them. The only real people are probably the traders at the high yield because the old sayings, you make so much more money in the underlying. Okay. Uh, let's move past Apple. Again, how'd Apple do? Look at this, 20 cents. I'd rather be in Tesla. I sure in the hell would rather be in NVIDIA, right? I'll just give you the underlying. So I'd rather be in Tesla or I'd rather be in NVIDIA than I'd want to be in Apple over this last 8-month period. Remember, if I take 15 months, it may look different, but over the 8-month period. Now look at coin. Coinbase. Well, Bitcoin's not doing that well now, right? It's down. But the last 6 weeks, this is really down. This thing can really move and really, all of these with leverage can go up a lot and go down a lot. Just over the last week, it's up 36 cents. But look at this. It just got crushed here. $9. That's what leverage does on the way down as well, guys. But look at this, 787. But then I had a 604. So again, if Bitcoin was soaring and Coinbase was soaring, this thing would be killing it. But overall, let's see, how's it done? Well, it's done $9, right? So not as good as Nvidia, better than Tesla, better than everything on here except for Nvidia so far. It's still got 2128 to 1298 because when it runs, it really runs in the Roundhill funds. All right. So how about PLTW? 73.45, tame for where it's been. I got to go all the way back to 919 when I've been this range because I had 115, 116, 92, 90, 120, right? And yet we're grinding down a little bit. Oops, sorry guys. Didn't fix one of these. Okay. So 311, 312, but I've got some green in here. So pretty flat. I got 6 weeks of where I'm up 2 cents. Sorry, guys, an alarm popped off. All right, 2 cents. But how am I doing overall? Well, I'm doing damn well. Second best fund out of all these funds. And the best fund of these that have been here the longest, right? They're in groups of five. Excuse me. I'll show you what I mean on that when we go to the summary. So this thing is up a jaw-dropping 26 points, 2660. You bought this fund for 3145, okay? You've made 2665 in 8 months back in NAV, $4 in NAV, not anything to write home about while you were getting paid 70%. So you're getting a 70% yield for 8 months, right? Average. and you made $4 in the NAV. Not bad. Okay. I've told people forever, I love Palantir. Yeah, it's high, its valuation is high. It's only going to get higher over time, guys, unless the market plummets, massively. And I don't see that anymore. We could have a 15% down year in the S&P or the triple Qs for a year, but I don't see any 29 crash and all that. I do see the metals continue. I see everything inflating up for a while to where nobody can afford anything, right? The middle class is just getting squeezed. And I know you guys know that. That's why everybody wants income more than I've ever seen it. All right. So we're now into the June 18th. Remember, all these guys launched February 19th. So the first five through Palantir, all when I compare performance, Palantir wins that. We'll talk about that when we get to the summary. So now we're in Amazon. Okay. So two stocks, I think there were three that reported earnings that are on here. Two, it could even be four. Two had big moves. Amazon was up big in the aftermarket today. Just wanted to clarify that. So while today was down 0.08, that's over a week. Okay. So it closed today at 43.88. It was up big in the aftermarket, like 11, 12, 14, 15. I was going to put the number here, but that changes all through the period. But Amazon reported after the market. Obviously, they liked, the results, and it's charging up. That doesn't mean tomorrow it's still going to be up. Just reporting, guys. It's what I do. All right. So 32 cents last week, 40 cents this week. So it's a 47% yield for a giant company. It's not bad. Nice to see them up after market on earning. All right, let's move on. Now, what have they done though overall? Very mediocre. Remember, these haven't been around as long. They've only been around 4 months. So we went from 8 months, five funds that Roundhill launched, to 4 months. How well can somebody do in 4 months? Well, some couple of these are kicking ass. So there's Amazon, okay, barely up a dollar, dollar 70, dollar 74 if you want to be exact. So you made a dollar 74 on a $50 buy-in net. That's not very good, guys. It's still green, but it's probably not much better than a treasury bill. We'll see. All right. How about BRKB, Berkshire? All right. Well, Berkshire is intended to be in a recessionary environment, a conservative. This is like utilities and companies. You still have to buy toothpaste. You still have to wash your face, right? So soap, all of the things underneath that people have to, the Procter and Gambles and the kind of companies that just because we're recessionary, I don't think you wait and take a bath once a week. Some young kids do, right? To save water and save money, but typically, adults don't behave that way. All right. So there we go with 16 cents, a low distribution. But look at it. It's like that all the time. Over the last 6 weeks, it's still down. Look at this. You're down more than you're up. Why? Because right now the FOMO is still in AI, although the metals are running. So I expect that a lot of the FOMO and AI will die down. Some of the Mag 7 monies will come out and the miners will really get retail. They're doing 100. If you look at the average miner over here, they're up 80 to 100% year to date. Your S&P's up 17%. So where do you want to be? Do you want to be in that? And gold miners have led the S and been the highest performing S&P stock off and on here for the last 3 months. Newmont, AEM, both just had fabulous earnings. AEM just blew it out, beat their earnings by 22, 23%. These things are going to print money, guys. And that was on a quarter where gold only was 3,800. So when they have a quarter of 4,000 or 4,100 gold, it's going to go up even more. All right, guys. So this is one. So you got a negative on that one, right? It's down $1.16 more than it's up. Not what you want to be in. All right, how about Hui? All right, Hui the owl. Just amazing, guys. Again, I always say it. I want to clarify. I could go out and say, oh, I'm really bullish on it. I'm not. Long term, I am just not bullish on Hood. Sorry, guys. All you tokenization and all the rest. To me, it's a retail play. It's like Carvana. Yeah, the car market's changed and people need to sell used cars and all that, but you got competition, and so does Hood, right? They've gotten all the little tech weenies with, their mobile phones, and the people that don't, have five or $10,000 accounts and can trade like crazy on their mobile. I'm not saying some of you big players aren't over there. There are some. But to me, all of the other companies, push come to shove, can innovate, or somebody simply buys them out. I don't see an IP that nobody can keep up with. But let me give credit where credit is due. These things have been going up and paying like crazy. Now, a lot of that's a tribute to Hui. Look at HOOY, or sorry, what is the symbol? Probably for yield max. I'll show you in the comparison. Again, Roundhill kills them, just absolutely destroys it. Why the hell would you own yield max? Probably because you're a fanboy or you listen to a fanboy. Okay. At least I hear today, I've been preaching this for 2 years. And that's as long as these real high yield funds have been around. It's all about total return. Now I see 90% of YouTubers saying, look at total return. So at least, nobody's going to give me credit for saying that, although some of the people that know me well and saw what I was doing well. But the point, and I'm not looking for the credit, I'm just looking to help people, guys. Put your money, I always say this, put your money where it's treated best. Is Yomax treating it better than Roundhill, and you've done the analysis or you've looked at mine? Then go for it, guys. I get it. But if it's not, put your money where it's treated the best. Your wallet wants to be happy. Hug it once in a while, right? Care for it. Feed it, and it will grow. So I always do that. If I see something better, I move over there. Yeah, I build up loyalty. I build up loyalty to my Patreon base. I build up loyalty to my YouTube base. If I see somebody I know that's always out there making comments, I tend to reply to them more than I do somebody else. The same thing in my Patreon. I have a $5 tier, $10 tier, and a $50 tier. The $50 tier includes a personal one-on-one call for 45 minutes. I never go under an hour, hour 15 on the first call because I'm talking, I'm asking questions, I'm assessing what their needs are a lot more and getting to know them. That's important. If I was a lawyer, it would be a flat billing. It wouldn't work that way. I'm not. I'm in the people business, guys. I want to help you. Okay. I don't want to BS you. I don't want to sell you anything. If you don't think it's value in Patreon, it's month to month, right? I have, 1% of the people that leave. And you know what? The 1% last month was because I was traveling. I had some family issues in the US I had to go back and deal with. So my postings over about a 10-day period went to like one video. Well, guess what? I made my monthly average back to 15, 16 posts in my Patreon. That's my monthly average for the 3 months now, right? For each month. So I got right back there. But if people are that short sighted, they do that. But all of us need to understand what's best for our wallets, guys. Put your money where it's treated the best. And I think if you look at my analysis, for the most part, you'll see that Roundhill is much, much better than Yield-Max. Now, if there's an offering over on Yield-Max that you liked at Roundhill, by all means, stay there. I've owned some GDXY. But guess what I did? Yesterday, I sold all my GDXY because I'll still get the dividend on Friday. I put that, and then, I'm waiting to double or triple that over in GDXW. Why? because over the next 3 to 4 to 5 years, GDX will be up 3 times or 4 times, right? And it'll go from $70 to $280 very likely in 5 years. Let's say it's only a triple, it's only 225 or something. Well, guess what? I'm getting 120% leverage on the weekly from GDXY. Now, that's for you income guys. I got a lot more money in GDX. I put on my own, synthetics, if you will. I sell a put and buy a call and go long, especially when it pulls back. And those are things that I allow my members, even my $10 members, to schedule a 45-minute call with me for $50. The best $50 they've ever spent, I can guarantee you that. And we talk about, I teach options, right? I've got 4 or 5, 6 people that I've taught options on. They come to me, say, Bruce, you've been doing options for 40 years. You talk about it like you really understand it. How do I go learn options? What course do you recommend? I say, hey, right now I have the time. I can do 3 sessions with you for 1 hour at $75 a session. Okay, that's 225. It'll be the best money you ever spent if you want to learn. Now, some people are more advanced than others. I just finished my third session with someone who really understands options. Now it's about picking my brain within the gold and silver and metals about where the opportunities are. Is it after an earnings or is it after the retrace we're in, which is what I identify, right? Because you've got to understand how to do options, how to put the trades on, get your account set up. And then, secondly, you have to have somebody who really knows how to assess the market, right, in a sector where there's capital rotation and play it over time. All right, guys, enough on all of that. Hui is just fabulous, right? Let's see the $1.26. Okay, that's back to 92. We've had 111, 132, 112, 165, 182. This baby pays. Okay, I'll give Yomax credit. They got some big payments. It used to be $7 when it was monthly, and their weeklies will be okay. They may even pay equal to us, but guess what they're not going to do? They're not going to be anywhere near this kind of number. Look at this. Over 4 months, 25.50 in dividends. Okay, but it went up 1308. You want to look at Hui during that period of time? It sucks in comparison, guys. Just flat out tell you how it is. Argue that one for me. Tell me why Jay and crew are doing a better job. They're not. Okay? They're not. Going weekly is not going to change their results. Just fabulous, fabulous. Again, but is that a little scary that maybe it's toppy? Yeah, you better believe it. So I might want to go on, and I'm not doing it right now. I'd go in, I'd analyze the chart, I'd do a deep dive. I might even go in and buy some puts. Again, it would be very expensive on the premium. It might not be the best strategy, but I might take some off the table and try and buy it back. I might start trading it more because this is just fabulous. But this is not something, even if it was Palantir and I was bullish, and Palantir did these same kind of things during its shorter period of time. Absolutely fabulous. I was doing it in PLTY when that's all there was. I sold at 91 and bought back at 74. Did that repeatedly because that's what you have to do on these stocks that roar. All right. This one, big down on earnings. So we had a big up on Amazon. We got a big down on Meta, guys. All right. 40 cents, no big deal there. All in the 40, 50, 60, 70, 30, range and payouts. But Meta's a big giant company. They didn't like their earnings. It's hard to perform when you're there that damn big. Look at Nvidia. What is it? 5 billion now. Maybe it's only still in the fours. I saw a number, and three used to be the top, and then Nvidia I think is four now, and its market cap probably not five. But do you think that stock's gonna go 10x in the next 4 years? No. But over in the miners, I just put out a list of 25 miners that I feel like have a strong 10x over the next 3 to 5 years. Some could go higher. Some might only be a five bagger. But guys, you're playing games over here, getting 5, 8%, some of you. You think you're getting 30 or 40% yield and you were chasing yield max only to come find out that after total return sucks. All right, guys. So look at this. You're down 13, you're up 9. That's not a winning formula to build wealth. Look at Netflix. This used to be a great income fund. So somebody that wanted to retire on Netflix at Yiomax, because they've had that for a long period of time. We're only 4 months over here. This is a horrible performer. I don't know what the underlying. I haven't had time. I don't look at this. I spend my time more in the metals. Okay. Although I look at some high tech and AI stuff, but Netflix is really a retail. And normally, when people are hurting, they stay home and watch more Netflix and either cook at home or get fast food, pizzas or something delivered, Domino's or, the low price, which is not good for your health. Everybody knows that. But they taste damn good. So, this is horrible. 9 and 18. This is a way to go broke, guys. All that money you made before, now you've lost it over the last 4 months in Netflix. It has nothing to do with Netflix. They're still beating. No, I think this might be the one fund that Yield Max slightly won on. Why? Because when it's going down so much, that with that leverage, we're going down a little bit more. But it's close, and it shouldn't be close. All right, guys. So let's go look at the next batch. Now we're into the 725 launches. We're 3 months. So we got a 3 month, a 4 month, and an 8 month. All right. So Microsoft. Sorry, that's not my. Yeah, it is Microsoft. Sorry, guys. You see these MFSOs and MSTWs, and you makes it harder. So Microsoft. I still remember all of the yield max because I reported on that so much longer, guys. So I'm not a yield max hater. I'm just a realist in understanding yield and how to have my money treated the best, right? So I've been chomping at the bit for GDXW and GLDW to come out. The GLDW is just physical gold. I like GXDW much better because they're going to be volatile, but the miners have leverage to the gold price. So gold's going to go to 5,000. We'll see 5,000 easily next year. So when we see that, GLDW will go up, but I don't anticipate it to go up as much as the miners. They have 2.5 to 3 times the leverage on the price of the metal. All right, not good, right? Six, well, it's a positive $1.50, right? All right, this is your micro strategy. This is just damn awful. But I've been telling you guys for the longest time there was 1 week of hope where it looked like MicroStrategy may be back. 1 week does not make a trend. This is the biggest hole there is in all of these funds. Everybody. Go out and look at MST. I bought 100 shares of Defiance's MST just so I could see a 200%, leverage on an income fund. I didn't care. You know, it was like $1,800, $2,000 investment, 100 shares. So I get it every week and I see it. Pays decently. It's eroded like what, 70%? I don't even think I look that often. But it's brutal, right? When something is going down. Look at this. $29 and it's made 8. So what do you call that? You call that a $20 loser. That's 40% net loss. So if you annualize that, that's a big loss. So how to lose 40% in a month, or sorry, in 3 months? So you guys that are looking at these over here and looking at the yield, that's nothing. Look at these two numbers added together. But I'll do that in a simpler way and show it all for you in my total return column. Now, AMD, on the other hand, has been a killer, just an absolute destroyer on the upside. Look at this. $20, but it does look like the SMH, right? The chips, semis are under pressure. They've run so far so fast over time here. I think this is going to have a hard time keeping up. But a lot of the thought behind the chip sector is the AI sector. How do we get continued compute power, right? And speaking of power, guys, uranium is running again. I talk about all the commodity super cycle, not just metals and miners, guys. I talk about the commodity super cycle. I'm starting to move into some oil positions. I see oil bottoming fourth quarter. It may take the first quarter to see the lowest, oil price, but I see 2026, 2027, and in the future I see 240 oil. Probably have 140 oil in in late 2026 or 2027. Commodity super cycles do the same thing. Go back and look. We had $147 oil in 2011. So whether you understand it or not, and then on the uranium, some of those, look at CCJ the other day, up 23%. That's the largest cap and producer in the Western Hemisphere. In the Eastern Hemisphere, Kazatomprom, right? But they've lost all their middle management, right? They were by far the biggest producer of yellowcake, the raw uranium that the nuclear reactors need. But with some of this SMR technology where they make small modular reactors, okay, and uranium, spot uranium has the ability to move massively higher because the input cost to run a nuclear reactor is like less than 1% is in the fuel, right? It's in all the other components, labor, you know, et cetera, et cetera. It's not in the underlying yellow cake, they call it, the mined uranium from the same way you dig it out of the earth that you dig gold and silver and antimony and critical metals and all that. And I got to tell you, it's the most efficient power on earth, um, nuclear. We need it. We need it badly. That's why Trump and many other countries are labeling these things critical and going out. So the US said they're going to invest 80 billion in Westinghouse in the tech of this small modular reactors so they can build them faster. Normally it takes 10 years to plan, architect, and build a nuclear reactor. But with these SMRs, then you can get there a lot faster, guys. And that's what is needed. But what will happen until all that, power can come on board is continued oil and natural gas. So I'm very bullish on that sector beginning next year. So I'm already positioning some things over there. But uranium had a big sell off. Now it's bounced and it's likely to run and run for a while. There's nothing almost like it's like silver. It's such a small market, and there's only a few of the 50 or 60 uranium miners that even know what they're doing and have a management team that can dig this yellow cake out of the ground. So I'd say there's 8, maybe 10 companies even worth owning. I go out and buy URA or URNM, okay, two ETFs, and you'll see the volatility. Go look at those prices. I took some out on my URA and URN, but they bounced with this 80 billion that the US declared. I actually lost $1 on those trades. I got greedy, guys. I sold and then I tried to buy $10 back in and it got to about $9 from where I sold. And guess what happened? Then it's moved up for a couple of days. I said I'm going to wait for the $10 and pull the trigger and capture that gain. And you know what happened? They did that announcement. It shot up to where I said I got to buy back now. And it cost me $1 on that. It's not the end of the world. I was up massively when I sold. But there's no trading that's perfect. I tell the guys in my metals, yeah, gold's retracing right now. I'm not talking about an individual day. I'm talking about we're in a retrace. We went down in an A, we're bouncing up in a B. We likely got into mid to late November, a C wave down. And then I think we're done going down. Same kinds of things happen. And then they roar on past 43, 4,400. Like I said, we could see 6,000 gold next year. I think 5,000's baked in, probably six. All right. So let's continue on this, guys. I'm always going to tell you a lot of info, these rants. Listen to them if you want to learn about what's happening in the market. So AMD is paying very well. This massive 31, not quite as good as the hood situation, but damn well, right? What did, yeah, 38. But these guys are also in a shorter time frame now. We're on the 725 time frame. So it's just awesome. But again, that's 31. But I'm not sure that this is going to continue. This feels toppy to me. If I was owning this ETF and I'm not right now, I'd probably be taking some off the table. I mean, $25 right here and hardly being down. Yeah, it could run another 10 or 15%, but Broadcom, Avgo, all right, 64 cents, $10 and $7, guys. Not bad. Broadcom has a spectrum of tech. A lot of software companies they've acquired, some hardware companies. They're a very well managed company. I've talked some negative about them. There's a few things. They have predatory pricing. When they go acquire a small, great little company in a tech niche where there's very little competition, what do? They buy it, they pay a big premium, and they go jack up the prices to the customers, right? Those they have no concern for loyalty. And they figure, well, what are you going to do? You're going to go somewhere else? Most of the time there aren't good alternatives. So, but I got to hand it to them. They continue to repeat that. They also develop, they make great acquisitions. They are very well managed, even if they're ruthless, guys. And that was my point. They're a little on the ruthless side, but I never worry about that. I go where my money's treated well. As long as it's legal. If they do something illegal, that's a whole different issue. All right. Google. Google was up big on earnings. I didn't post anything here. So let's see how that plays up. This is a good time frame coming in here. Look at this. 725 to here. If you go back a year in Google, I don't think the chart's anywhere near that well. But Google is certainly over this 3 month period just, I mean, $26 in 3 months. There's $31 from AMDW. All right, so here's some more, guys. You can, when I don't tell you these, you say, "Well, Bruce, you're supposed to." They're there. You can see them on the screen. To me, that's anybody can read this. You can just go out to their site and find this. But if you want to learn something about the dynamics in the market and where the capital rotation is happening and where I'm putting money and understand all that, then come over to Patreon and continue to watch my YouTube videos. I do what most people don't do. They don't want to take the time to do all this. They want to put 30 videos out and they want to do retire on Misty or YLT is still the best ETF. All that horse shit. Okay. And that's what it is. It's BS and it's horse shit. Half of them are living in their mom's basement or they're doing their stuff from a garage out there. Okay. You want somebody that's got money, knows how to make money, and has done it. Do you want to be around this bullshit stuff that doesn't work? You know, the old saying, keep doing what you're doing and expecting results is the definition of insanity. Make some changes, guys. This commodity super cycle, these things are, I want to say once in a lifetime, but this will be the second one I participated in and the third one I watched. I watched the 71 to 1980. Okay. I didn't get out of college till 77, but I was in the workforce and I watched it, but I didn't invest in it. But you know what? By the time 2001 came around, I had already made and lost millions working in big tech and options, went through a divorce, had a lot of issues, okay, and challenging my wealth and ability to retire. So I doubled down. I said, what's coming after this dot com bust? I didn't believe it. the NASDAQ went from 5,000 to 1,500. Took it 15 years to get back to that level. I cried, I listened, I studied. I said, guys, I'm 50 years old. I want to retire. Okay. I don't want to work to 65, 70, 75 and grinding it out. I worked my ass off. I made a lot of money, but I worked like a dog, right? They expect a lot out of you when you make a lot of money. Okay. So, having done all that stuff, I knew what I needed to do and I went about making that happen. And out of that, out of the ashes, came me figuring out the commodity super cycle. And I played that super cycle to the max. Okay. And in that super cycle, um, sorry, somebody knocked on the door. It got handled. Okay. So what we've got here is, um, let me get my thought together. That confused me. All right. So I was talking about finding gold, and then I understand. I played that cycle up and down, maximize it, learn everything I could learn about commodities, in particular the metals. Just worked on it, used all my option strategies, and I got about 8 to 10x on the money I did have left, and that was enough to then retire. Okay. So I'll never forget that. I've been waiting for the second cycle. I thought around 2020 we may be into it. 2016 was a little false breakout. And finally, the metal leads, right? The metals leave, then the big cap miners leave. Then we spread down into the smaller producers, the explorers, the developers. Then silver starts to move, right? Silver follows gold. It's a proxy to gold. When you get up to high prices of gold, people with less money can't afford metal protection. But guess what silver has? Silver has two sides to it. It has the industrial use. Okay. It's used in solar big time. It's used in warfare and weaponry. It's used in medicine and healthcare. Okay. Electrification, right? The solar panels, electric cars, electronics, mobile phones. So it gets used a lot. Okay. So we're in a 4-year deficit. Uh, Gold is likely to go to 12 to 15,000 at a minimum, guys, in 4 to 5 years. We're at 3,900, 4,000, depends on whether you're looking at futures, spot, etc. Just call it 4,000. We've been 4,400. It's nothing to where we're going. Why? Mainly because governments print money and we're at 120 to 130% debt to GDP. Japan is at 200. Europe is on the brink of collapse. France, Germany, the UK, they're all massively up there. They're overrun by immigrants. There's socialism in France. They're paying out people. The strength of the union. So people would rather not work than work and get paid. So these governments have nothing else to do but go to war. Well, what's war going to do on commodities? It's going to suck up oil like you wouldn't believe. We'll have massive shortages, spikes in that. So one thing leads to another. The future does not look that bright, guys. We'll get through it. Every generation, every cycle does. But this is sort of the end of life of major first world countries being drugged down and decaying from within. I'm not even talking about Republican versus Democrat, which is just a bunch of bullshit. We shouldn't be so divisive. We are because both sides are dug in. I could care less about it other than recognizing it. Okay. So if we don't get our act together, which it's almost impossible at this point, it's not a swamp, it's an ocean. Until we get some fiscal sense, we're screwed. So paper money is declining. It's not that gold is going up. It's paper money is declining, guys, because we measure it in our own currency. But go look at gold in every currency in the world. It's doing nothing but going up. All right, guys, I'm done with my rant. Sorry, I didn't mean to go as deep this time, but I can't help it sometimes. That's how strongly and committed and understanding this environment that we're in. It's much bigger than just meeting the eye about FOMO chasing your favorite, you know, um, artificial intelligence stock. All right. So Costco, what do you have? They just opened, right? We did get a first dividend, 26.45, paid 25 cents for a 26.45 yield, down 1 week over the opening, right? Launched on 10/23. So whenever I show this date, the price is 1 day behind. Okay, Uber, I'll let you read it. No big deal. 77 cents, 24 cents, higher yield on Uber, right? And up. ARM, great technology, chip technology in ARM. 50.87, 50.49, down a little bit. Nice yield, the biggest yield of these new four. Look at Babo. What do I tell you guys? If I had to name three or four of, let me pick three of what I think will be the best performing stocks. I'm talking about multiple years. I think Baba, the underlying will be one of them. Why? Because first off, it's an Amazon for Asia, and it's a little more than that. Amazon in the US has all of its cloud services. By the way, that's what drove Amazon up in the after hours. It is not the retail where you go order something online. For those of you that don't know, Amazon's, you know, what do you call it? AWS. I have a very good friend that runs one of the major Japanese car companies globally for them. So I have a lot of friends that I used to work with that work for Amazon. So once they went into AWS with cloud services, a lot of people that did some of the things I did gravitated to those big giant companies that pay well and have a lot of growth. So, but BABA is undervalued, guys. The Chinese equivalents in these techs, the deep seeks, and these various companies will do very well over time. I think better than the US equivalents when they have an equivalent because the US equivalents are priced so high. All right. So BABA would be one. Clearly, GDXW would be the second one. And probably Palantir would be the third. Those would be. Now, this is similar. This is gold itself, physical gold. This are the large and mid cap gold and silver miners. These have leverage to the metal price itself. So this should do well. This should do better. This should do well. Okay. Add in PLTW. Those would be my four picks right now if I had to be in. Now, can HOOW do well? Sure. Do I see it over multiple years doing that well? No. If I'm wrong, I'm wrong. But I'm going on record to say that. But it has been killing it. I give credit where credit's due. All right, guys, I'm going to let you go. This is all I got. Oh, sorry, I am not. Okay. Here's a summary. You want to see this. You want to see the Roundhill comparisons only because I went so long on the rants, guys. I started to lose my voice and so if you want to see anything, here it is. This is just a summary of these funds, right? I color code them first 5 8 months, next 5 4 months, next 5 3 months, the next five or next 4 1 week. These two just launched, right? No declaration. But if you look over here, and let's make this black so it doesn't stand out. What I do owe you guys is a Y max versus Y pay. But again, they're not always exactly right. When we have a stock in the 15, they're 1 for 1. I can find, well, I take that back. There isn't one for AVGW. They don't have a Broadcom. Okay. So there's really only 14. And when I show you the next page, Roundhill won 13 of the 14. Then down here, there's only one, and it's only a 1 week sample, right? and we won that. BAB, I say we, BABW beat BABY, or whatever Roundhill call or Yomax calls theirs. Babo. Okay, so BabW beat Babo. But I don't, it's not, if it had been reversed, it's no big deal in 7 days. These start to matter. All right, guys, so what do I do over here? I try and tell you what's the best fund in total return out of these five that have been around 8 months. Well, it's by a big advantage. It's 86, 89. Only two of them have both positive on the NAV and on the yield payment. Look at this yield payment annualized. So it's already paid 8 months, right? But annualized says it would be 130. Sorry, guys, I'm up here. So 86%, we win this. All right, let's go in the second. Not even close. Not even close. Ooh, just destroys, right? But again, you can do that at 135. When you get to 250, this is probably under 100 also. Just can't sustain it, right? How about the third group? We get now this is when they can get extreme. You've got AMDW winning at 313. It's not even close, right? And then we drop to the greens. Who wins the greens? Oh, why is this 2-6? Oh, I take it back. That's a good showing. So AMDW wins, but when I see a strong other 261, I'm showing it. That's what happened. So I showed you a first and second. Down here in the greens, okay, it's an 87 for BABW, and then it jumps to 312. That's not close enough for me to show a second. And down, yeah, and here we don't have a distribution yet. All right, here's what you want, guys, and then I'm done. I won't take too long on this. All right, I updated this, right? Because what'll happen is I had to update this and I update this. So right now, not even a question mark, Roundhill blows on in the NVIDIA fund. What do I tell you guys, right? So this is a positive number, and this is a negative number. So there's the big difference. What did they do? They both paid 50% yield, guys, over the same exact time period. And please don't come in here and tell me NVIDIA did not launch on 219. Duh. No shit. I know that. I'm trying to show you equal performance in equal time in the market. If I go in and show NVIDIA from 2024 beating NVDW for 2025, that's not apples and apples. Who gives a crap? 2024 is done, right? But this fund began, so I make this fund start, okay, on the same time frame. And a few of you guys that don't listen and you just look at the image go, oh, Bruce, it didn't launch on 219, it launched back in 2024. So stop it. Listen to these things. There's a lot of value. I know it's too long for most of you. Then just scan forward, but don't ask stupid questions if you didn't listen to it. It's annoying. All right, 324 minus 30. Do you see the difference? And why did you gain this and why did you lose this? Because they got no leverage. They're capturing 33% of the upside. That means they're losing 67% of the upside. Okay, if I were to go in to show you NVIDIA, it would beat both of these. Okay, and everybody knows that, but you say you need income, then what are you doing down here? Because you lost 30% of your fund value, right? You paid 21.49 at on February 19th, and it's only worth 16.78. Oh, but house money, I'm gonna get all my money back. What kind of crap is that? Okay, that's an illusionary idea. You know what I relate that to? When somebody prices something at $9.99. It looks cheap, doesn't it? It's a psychological. How much cheaper is it than $10? Only 90% of you got it right. You're right, 1 penny. I don't know what your other 10% were thinking. Okay. It's psychological. So house money gets to be psychological. There's real value if your NAV stayed exactly the same and you just talked about your dividend. 100% agree with house money, right? I paid $20 for the stock. 2 years later, it's worth $20. Okay, flat NAV, generally speaking, flat. And I've gotten $20 back at the end of 24 months. I'm now writing free. I have no investment. I've gotten $20 back. I paid $20. The stock's still at 20. But guess what? When the stock's at 10, it's an illusion. Okay, you got $20, but you lost 10, so you only made 10. Okay, that's a 50% return over 2 years, which means it's probably 25% a year. So that's a decent return. I can accept that. That's why total return is everything. And these terms get thrown around by fanboys to get you to buy in. I mean, I've put charts out on house money, but I'm trying to explain the differences of just accepting it and fully embracing and understanding what it actually is. And then I'll take it a step further. Okay. So, what happens? Hear me out. What happens when that $20 stock in 2 years pays you $20? Okay. It's still worth 20. And you go right on. I'm going to retire on this son of a gun. Right. But what happens when it changes? What happens in a year later? It's 10. What happens in 2 years later? It's 3. You know what the house money guys say? Huh. Well, it's still all free money. You know what I say? Bullshit. BS. You just didn't take your money and put it where it's treated well. Yes, the first $20 in 2 years was a good investment. You got a 25% annualized return. Okay. But once it starts underperforming, it's still value. Do you want it to go to zero? And then when it just stops in another 6 months and you say, well, no, at all times you need to reevaluate what capital you have deployed. You still have a $20 stock. If you bought 100 shares, that's $2,000. Okay. So, do you want to put it somewhere where you're going to get 70% total return? Or do you want to leave it in if this fund is declining? So, be careful of just buying into these concepts of house money. Here's another one, drip. Oh, yeah, I drip, right? You know where these things come from? They come from slick fund managers that get paid on assets under management. They're telling you what you want to hear. When they can't perform without drip, they tell you you got to drip. It's like government, right? They don't live the health care they get, the pensions they get are way better than what the average. So stop listening to these people on Wall Street that don't give a damn about your money. Oh, you got to drip. I'm not saying drip. If you got a winner, a real winner, and it's consistently a winner, and you don't need the money, then drip's okay. But understand, well, you'll have a better NAV. Of course, you'll have a better NAV. You keep buying more shares. So anyway, guys, I just get irritated at the BS that's out there. And I'm really going off today. All right, so I'm going to get through these. No more, I promise. Promise, promise, promise. And I will live. All right. Tesla. So you have 1380 to 1191. It's only 2% better. But guess what? It just keeps going at that level. So why? Because you lost 43, you lost 5% more over here. You outpaid by 3%, but you lost 5% more. Had you done a better job on the upside, then Neomax would have won this. Simple. Apple. Okay. 629. I'll even round it 6 to 4. Got a 2% margin. Same issue right here. All right, let's go over here to Coinbase underlying. Not close. When you got two reds and you got a green over here, okay, you outpaid by 5%, and then you went down 16% less. Add 16 and 5. Sorry, this would be what? 5% there. and 16%. Yeah, I think this one is because of the way we um, manipulate. It's not manipulated, but the way the formula works. You can't go over 100% down. So bottom line is you're at 23%. I was getting around 21, 22. So you got 23% better, guys. Palantir, what do I talk about? You don't want to go down in the high flyers. What do you do over here? You can't even distribute as much and you're massively going down. Why? Because Palantir goes up more often than it goes down. So you want leverage. Okay. Anything else is BS. Drip in, all that crap is not going to get you a better result. It's the definition of insanity. So you're outperforming almost 60% better. Who the hell wouldn't want their money treated 60% better in a 8-month period of time? It was a no-brainer when PLTW came out. I went over there. I actually waited a month because PLTY I was expecting $7. And you know what they paid us? 250. You know what they earned? $9. It was just chicken crap, right? You're not going to pay when you should pay, okay? Maybe they knew their NAV was going to keep eroding even more, but that's just a BS excuse too. Fix your system. There are better things out there. Go put your money where it's treated best. All right, guys. So Amazon, what are we doing here? Look at this one. Now, in fairness, Max is yielding, baby, 28% better. But they were 27. Oh, I got a new winner here, guys. But look at it. I call that razor's edge. But they won. It's razor edge. And I will always be fair. I don't think it'll last probably in the next payment, right? Because what did Amazon do after hours? They're up big. Guess who's going to capture more of that up? AMZDW. All right. This one, Roundhill. Why? Because it went down less. Both of these are now red. Down 2.5, and they're down 3.5. So close, but who cares? They're losers. Who the hell wants to be in these funds right now? Look at this one. Everybody, but you know what you guys are doing? This is a perfect example of house money and flawed thinking of people that invest their money. Well, I'm killing it in Hui. Why would I go anywhere else? Yeah, why would you? Why would you want to go over and get 1.5 times more gain on your money than you're getting in Hui? But you know what, you guys that are going, you're losing your ass in most of the funds and Hui's paying you. But again, when did you get in, right? Look at it, it's flat. 64.97 to 65.37. Look at this guy. 52.75 to 70. That's real money, guys. And look at this one. Now we got a negative here. See, I didn't go fix these. So Meta, only about a 4-point difference, 4.5-point difference. And this is the one I told you they won. Nothing changes. 12% negative, 4.5. If you want to own Netflix, buy it in YieldMax. It's a better deal over the last 4 months. But who the hell would want to own it right now until something fundamentally changed? Okay, 15 to 32, the win continues. Less of a loss, the win continues. A huge advantage, AMDW to AMDY, right? Again, almost double your money. At AVGW, there isn't an equivalent. And look at this one, more than double your money, guys. It's simple. So I'd have to amend that and say, hey, YieldMax won too. Okay, whoopee. Doesn't really change anything. What is it, 13 to 2? in favor of Roundhill. And then I got one more down here, right? I'm honest, guys. I don't BS. I don't alter the stats to make it look my way. Okay. So the Costco, I know Roundhill's been or Yomax has been approved on that, but I don't think they ever launched it. On these, I mean, you can't, one pay period. Sorry, I'm not going to give it, but it's an example. If the stock is moving up, it is. Look at this. Just in 1 week, they gained 1.38. They lost 0.75. It is what it is on their ETF based on the same underlying. So that's what we got, guys. I promise I'm done. So just note these. This one's going to be fun, guys. This one's really going to be fun. Now, I'm not as bullish over the next 4 weeks on GDXY. And I'm not as bullish on GDXW. I don't think GDX, I think in a week, GDX may be higher, but I think over the next week or two. So some of you are asking me, my Patreon, some people were saying, hey, do I try and buy GDXW cheaper? I think in 2 weeks, you can probably get GDXW cheaper. I wouldn't be surprised to see it in the 40s again, maybe even 45 or something. Okay. Can I guarantee that? Hell no. Right. But that's my gut. I bought some initially. I went in and sold everything I had in GDXY and put it all in GDXW yesterday. And I didn't get it early. I was teaching an options course for the first hour of the market. So I bought it at like 51.19. But I'll put double that, triple that amount in there. And it's still a small percentage. I own way more of GDXJ, of Nugget, right, of things like that, and have call options, in leaps on those things. So come over to Patreon, check us out, www.patreon, TWC100. All right, guys, Bruce signing out. I'm not a financial advisor. This is not financial advice. Bye for now.